Hello, 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 everyone. Hope everyone is having a fabulous Wednesday. I just realized, look at that. That is so gross looking. That's sunscreen. I think that's sunscreen. I swear I'm not like sweating oddly from my chest. That would be weird. Okay, so welcome to our June Q&A session here in the Badass Money Makers. It's funny, we moved some things around because this month, as you may know, in fact, today, we are actually doing our Q2 tax day, which I'll talk about in a second. So we didn't do a workshop last week because we know kind of with Q2 payments and lots of stuff going on in tax day, that's a lot for everyone to have to keep up with. But we kept the Q&A, although it's funny, I'm realizing we probably didn't need to keep the Q&A because we're going to be answering questions inside of the tax day. But we kept it, and we had some quarterly calculation questions come up anyway, so I thought this would be a good time to just do those. So bear with me real fast. I'm going to try to pull these up. And if anyone, I see a bunch of folks, or a couple of folks are watching us live right now. If you're watching live, first of all, say hi in the comments. Thank you for being here. Second of all, if you've got questions, put them in the comments because I'm more than happy to answer them today. If you can't make it to tax day, or if you just have questions on something other than quarterly taxes, you can ask those too. That's totally appropriate. But I do want to go ahead and dive in soon. But before I do, that's just bugging me. I don't like that. It's bugging me. That's okay. It's so funny. I think that's exactly what it's from. It's just like sunscreen that got like greased into my dress. So before I do that, let me talk about tax day real fast. So tax day, for folks who are new to the membership or maybe just aren't aware of this benefit, we do a tax day every single quarter. So we do one in April, we do one in June, we do one in September, and then we do one in January. We usually try to do it about a week, maybe 2 weeks before, well, probably not a full 2 weeks, but usually like a week, week and a half before the quarterly estimate is due to give you enough time to get your payment or your calculation together and make your payment, but also not so early that you don't have your numbers yet. So there's like this really tiny sweet spot. And so that's why we're doing it today. We'll have our next one. I don't know if we have a date for our next one yet, but we'll get that information to you, but we'll have our next one in September and then again in January. Now the April tax day is the big one. That's where we not only can talk about quarterly taxes because your Q1 payment is due in April for the current year, but also talking about your tax return in general. So on the April tax day, we'll have a bunch of folks who are doing their prior year tax returns, and then we'll have some folks who are also doing their first quarter estimates for the current year. So that's a big one. That one ends up being a little bit longer to give folks more time to kind of do both. So, but tax day, Q2 tax day is today, this afternoon from 1 to 3 p.m. Eastern. It is on Zoom. So you do need the link to Zoom. Check your email, check the membership portal. If you have any issues at all finding this link, please email us, support@megkwheeler.com. We'll make sure you get it. But it is on Zoom so that first of all, so you all can ask questions, but also if folks have a question that's maybe a bit more confidential or you just want to ask it privately, I can pull you into a breakout room and then that way you can ask it without everyone hearing. You don't need that much to come to tax day. So you do for the April one. The April one, you need all your stuff, but for the quarterly ones for June, September, and January, we provide the quarterly tax calculator. We've just updated it for 2021. So it's got, lots of changes in there. We provide that for you. What you do need to bring are your numbers. So you need to know what your income year to date has been, what your business expenses year to date have been. If you got a spouse that has income or you've income from another job, what has that been year to date? If there have been any taxes withheld on that other income. So if you've got a spouse who has, income and they've had taxes withheld, what's that amount? But you don't need a ton of information. And by the way, check your email. We gave you a whole list in the email of what you ideally should bring. So check your email for that detail. It's also on the membership portal. But not just Q2, but the quarterly calculations can be fairly quick. So you don't need to bring a ton of information. Sorry, I feel like I'm being attacked by hair. Now that my hair is so long, it's just everywhere. And so we're going to be there for 2 hours. The first, let's just say 30 minutes or so, I'm going to do a quick walkthrough of quarterly taxes. I've got a couple of slides. I'm going to show you the workbook. And then the last 90 minutes are for you to ask questions. So You don't need to come for the full 2 hours. Most people finish up kind of within an hour and 15 minutes typically. But you are welcome to, if it takes you the 2 hours, that's okay too. And I will be there to answer your questions. If for any reason, this has only happened once, but I will say it in case folks are listening, and it happens today. If for any reason you log on sometime between 1 and 3 and we're not there, it may be because everyone who joined finished up and we wrapped up early. So in the event that we do wrap up early, I don't usually stay on the Zoom if no one's there, but if you need assistance, just feel free to send us an email, support@megkwheeler.com. Let us know. We can arrange another time, or I can even maybe answer your questions by email or whatnot. So just let us know. Okay, I think that's everything I wanted to say about tax day. Let's go ahead and dive in to our questions for today. And again, if you're here live and you've got a question, feel free to drop it in the comments. So our first question is, and I don't have names. Let me see who this is from. This is from Katie. So Katie says, do I have to worry about a quarterly payment if I haven't made much money? It's a great question, Katie. So let's talk about a couple of things. The first is, who is actually required to make quarterly tax payments? So you are required to make quarterly tax payments if at the end of the year, when you file your return, you expect to owe at least $1,000 or more. So that's the first thing. So if you add up all of the money you've made in your business and you do a quick calculation and you realize you're not going to owe $1,000, then all of this, like right away off the bat, you don't have to make quarterly tax payments because you're not even going to hit that $1,000 mark. Then the second sort of threshold is, let's say you are going to owe more than $1,000. Then you want to look at how much money is being paid into the system before you make quarterly tax payments. So for example, let's just say that you have a spouse and they make $50,000 a year and you've made $10,000 in your business. Well, collectively together, you're going to owe more than $1,000. So you have to make quarterly tax payments. But let's just say your spouse is having sufficient amounts withheld from their paycheck to cover y'all's tax bill, then you don't need to make those quarterly tax payments. So that's kind of that second piece, is looking at like, where else am I having funds paid into the system, and do those cover what I'm going to owe? But I will tell you this, even if you're not making a ton of money, if you're making any money, it's still a good idea to kind of run through the calculation. And as a member of the membership, you do get access to the quarterly tax calculator, whether or not you go to tax days. So go into your membership portal, find the tax day section and grab it from there. So I would recommend doing that calculation. Even if you haven't made that much money, if you've made any money, it's a good idea. Because again, you might have to make quarterly tax payments if you are over that $1,000 threshold, and if you don't have other sources of funds being paid into the system otherwise. Okay, so that's what I would say. Now, if your business is in a loss, like if you have zero profit for the year and you don't have any other sources of income, then you're good. You don't need to make quarterly tax payments. What I would do is just do a quick documentation of that. Pull your P&L for the first, for January through May of the year that shows that you have, losses, and just make a little note on it. No other sources of income, therefore no quarterly income tax payment is due. I know it seems a little silly, kind of like a formality, but it's a good idea to do that, because that way, if you ever got audited, or if we were trying to dispute penalties or anything like that, we would have that note and that reference to go back to, and just to know, okay, that's why you didn't make a quarterly payment in Q2, because you had losses, you didn't have any other sources of income. Yes, in theory, we can pull that information later if we need it, but what if we can't? What if you switch accounting systems or something happens? So I think it's not a bad idea to pull that right away. All right, Katie, that was a great question. Thank you for that. Hopefully that answered your question. So this next question is from Sarah. And Sarah says, should I just pay in the safe harbor amount or actually calculate what I owe? Yeah, great question. So Sarah is referring to what is called the safe harbor. This is something that the federal government offers. A lot of states also offer it, but their rules can be the same or different. And the safe harbor from the federal government is essentially a rule that says, as long as you pay in the safe harbor amount over the course of the year, then even if you owe taxes at the end of the year when you go to file your tax return, you won't incur penalties on those outstanding tax liabilities. So you can still have a tax bill, but you won't get hit with penalties on it. The safe harbor approach is a great way to, or a great thing to be aware of, especially as you're starting to make quarterly tax payments, because if the idea of doing the calculation is really overwhelming to you, you can look to the safe harbor. Now, the safe harbor, and I'll tell you what the number is in a second, but the safe harbor is typically only going to work if you've made more money this year than you did last year, or the same amount of money. If you made more money last year than this year, the safe harbor is not necessarily going to be the best bet for you. So here's how we calculate the safe harbor. At the federal level, it's the lesser of 90% of your current year tax liability or 100% of your prior year tax liability. Now, by the way, if your adjusted gross income is $150,000 or more, it's actually 110% of prior year liability, not 100%, but 90% of current year or 100% of prior year. As you can see from that, with the 90% of current year, you've got to do the calculation. You've got to do the estimated calculation to figure out what current year is, to figure out what the 90% is, right? So that's that number. And then prior year, you can just look at your prior year tax return. And I want to be clear, it's not what you paid in. It's not the check you wrote in April. It's the full tax liability before factoring in taxes that were withheld or quarterly payments or anything like that. So what a lot of people will do is they'll just pay in 25% of the prior year tax liability every single quarter. They won't even worry about a calculation. It's easier that way. They don't have to dig up all their numbers. They can just pay this amount in and know that they're not going to get hit with penalties. You can do that, and that's okay. I have clients who like to do that. The downside to that, there's two downsides. The first I've already mentioned, which is if your income last year was higher than your income this year, meaning your tax bill last year was higher than your tax bill will be this year, then you'll likely be overpaying into the system. Not ideal. The second downside is if you do the safe harbor, and let's just say your income this year is significantly higher than it was last year, so your tax liability is going to be significantly higher this year than it was last year, then yeah, you're fine from a penalties perspective. You're not going to get hit with penalties, but you're going to get hit with a big tax bill come April because you didn't pay in nearly enough money. So what I tell my clients to do ideally is to still run the calculation, figure out what the estimated tax liability is, even if you pay in the safe harbor amount, put into a savings account whatever the difference is between the estimated tax liability and the safe harbor amount, and then put that money into a tax or into a savings account, so that way when April comes around, if you do in fact owe that money, you've got it. You're not scrambling to find the cash. Okay, so great question. The short answer is yes, you can just pay in the safe harbor amount. It may not always make sense if your income was it was lower last year than this year. No, I said that the wrong way. If your income was higher last year than this year, or it may put you in a bind if you don't also put the cash aside to pay your tax bill come April. So great question. All right, last question for today. What do I do if I can't afford to make the payment? Yeah, this is a great question. So the first thing I would say is the first thing I would say is pay as much as you can. If you have an underpayment at the end of the year, meaning you still owe money in, and it's determined that you owe penalties, so you didn't hit the safe harbor number, or there's a few other things we might be able to do to get rid of penalties at the end of the year. But assuming none of those count, you're going to get hit with penalties. Paying in as much as you can reduces the penalties. Okay, so I mean, obviously, the more you pay in, the less you're underpaid, the less your penalties will be. So that's the first thing, is pay in as much as you can. The second thing I would say is, this is when we're in Q1 or Q2, when we're kind of early in the year, so much can change throughout the whole year. So, your income may fluctuate quite a bit throughout the year. So let's just say, and because the way we calculate our quarterly estimated tax, or our estimated tax liability for the year, the way we calculate it is we take your actual numbers year to date and we annualize them, which means that we basically say, if the rest of the year looked like the first 5 months of the year, what would my estimated taxable income be? What would my estimated tax liability be? And that generally works for most people. But if you have a business where your income, ebbs and flows, then it may not be the best option for you. For example, let's say you do one really big launch every year. And let's say you do that launch in March and you make $300,000 in March, but then you don't really make very much the rest of the months of the year. Well, if we did the calculation the way I just described and we annualized it, then we'd be saying, well, you made $300,000 in the first quarter, so you're going to make that every quarter. So boom, you're going to make $1.2 million this year. That, your tax liability is going to be calculated off $1.2 million. And so that's what you're going to have to pay in that first quarter. And you might go, well, hold on. I'm not going to hit $1.2 million. That was my launch for the year. I know I'm good. That's my income. There are rules around seasonal businesses and things like that, that where we don't necessarily have to calculate it the way I just described. But for the most part, that's what happens. So if you fall into that bucket and you're going, wait a second, I'm not going to hit this income number. I just know I'm not. That's where paying in based on the safe harbor approach actually makes a lot of sense, because the safe harbor approach, presumably from last year, fairly represents what your income is actually going to be, or something close to it. So if that's you, I would pay in based on the safe harbor amount, not the estimated tax liability amount, knowing that as the year goes on, that income is going to kind of flatten out because it's not really going to be the same as it was in Q1 or Q2. And again, this is a Q1, Q2 problem. As we get further and further throughout the year, as we get into Q3, where we've got 3/4 of the year is done, and certainly Q4, where the whole year is done, this is less of an issue. But Q1, Q2, this can be an issue. So if this is you, then I would pay in that safe harbor amount if you can. If you absolutely cannot make the payment, pay in as much as you can and just, let's move on. And then when you do your tax return, or I do it if I'm doing your taxes for you, we will look at a payment plan, to help you pay off that tax debt. But I will tell you, the ideal is to get it paid in before you file. So if you can, pay in as much as you can afford now, and then try to pay in a little bit every month. You can do that too. You can pay the IRS whenever you want. So try to pay in a little bit every month. Basically put yourself on your own payment plan so that by the time you file that tax return, hopefully you've paid in all of the outstanding amounts, or at least you've paid in a good amount of it. Keep in mind too that you're going to have Q3 come up and Q4 come up. So I would also take a look at the money you have, and as you're earning money in your business, do you need to be setting aside more of it to pay your taxes? And I know this can be really hard, especially when you're just starting out and you don't have a lot of cash. But this is the tricky position you're going to get in if you don't do that, because you're just going to keep accruing this tax bill and accruing this tax bill and accruing this tax bill. And I will tell you, if your answer to me is, I can't afford to live then, like it doesn't bring me in enough money, then you need to evaluate whether that business or the way you're running that business can work for you long-term. So you may have to raise your prices. You may have to cut back on some expenses. You may need to think about shuffling things around, because the answer can't be, well, I just can't afford to pay the taxes, so I'm not going to. That's just not an option. Like, they're going to get them from you somehow, whether we have to do a payment plan or, something else. And my goal for you is to not be in debt to the IRS for the rest of your life. So that's my recommendation. First and foremost, pay in what you can. Second of all, consider paying the safe harbor number versus the estimated number if your income is going to kind of flatten out for the year or level out for the year. And then the third is, put yourself on a payment plan with the IRS. Nothing official, but start paying the IRS kind of every month if you can. Try to set more money aside from future earnings so that you don't end up in this position when we get to Q3. So hopefully that answers your question. Thanks to everyone who did show up here live. For folks watching the replay, just a reminder, we do these Q&As every single month here inside the Badass Moneymakers. If you have questions, you can always submit them by going to megkwheeler.com/QA. And what else did I want to tell you? And I will see you all this afternoon, hopefully at Tax Day, where we will do our Q2 calculations. Now, if you cannot attend Tax Day live, we will have a replay, but it'll just be a replay of the 30-minute training. So we don't record the rest of Tax Day. We just record that 30 minutes. So you can certainly go back and watch that 30-minute training. It'll be very valuable, but the opportunity to ask questions, you've got to show up live for that. So that's just kind of the way it is. So hopefully I will see everyone today, Wednesday, June 9th at from 1 to 3 p.m. Eastern. Again, you should have been emailed a Zoom link. It's also on the client portal. If you need any help at all, you can email my team, support@megkwheeler.com. Otherwise, I will. So we are not doing. So this month is a little funny for a couple of reasons. I should tell you about the schedule before I do this. So a little funny for a couple of reasons. Number one, because of tax day. Number two, because we're actually completely overhauling the membership. And I know I've been kind of teasing this the last couple of months, but we've finished mapping out our plan. We're really excited to announce it. We think we're going to be able to go live with it in July. So this month is a little funky as we're kind of trying to get everything moved over. So we are not going to have a hot seat. Let's see. We are not going to have a hot seat next week like we normally do. What we are going to do is we're going to add in another Q&A session for you all at the end of June. So another Q&A session, an opportunity to get all of your questions answered. And that is going to be Wednesday. Yes, Wednesday, June 23rd. I just had to make sure because there's actually there's 5 Wednesdays in June, but we're going to do it Wednesday, June 23rd. We'll send you all the details. It'll be on the membership portal as well. So, all right, my friends, I hope everyone's having a great week, and I will see you all at tax day in about 30 minutes. Bye.